All right. Good morning. Good morning. Good morning, everybody. We're looking on the 29th of April, 2024. Our analysis on gold, XAUUSD. Right. So this is the previous analysis that we did last week. Today is on a Monday. Mondays the market may not be moving that much. It's on a Monday. Let's look at what the market has for us this week. First of all, like we always do, we jump onto fundamentals, see if there's anything. 29th of Monday, April over here. We have the Euro news, German, the prelim CPI for the German. Will be coming out. It's actually the whole day meeting. Then we have another Euro that already passed at 10 a.m. and tentative Euro news that may happen anytime during the day. Basically, we don't have anything USD today, right? So that's good for us to do our analysis. Okay, so start by removing every other analysis that we've done before. We start afresh. We start a whole fresh analysis. So on Monday, start from, remember to subscribe for more of this each and every day. Okay, so there we go. All right, so we're on the monthly chart, monthly charts. And here we are. We have the monthly high, again, monthly low. The most immediate low on the monthly time frame comes in over there. Doesn't change because the market hasn't made any major moves. Okay. We have also, of course, again, this is a weekly high and monthly high on the same place, but we have a weekly low over here, over here. Okay, like that. We go to the monthly, starting there on the monthly. All right, I'm just adjusting this so that we move with it as we move with it. All right, so we have at least a daily low that has been formed over here. A very nice daily low over here. It's a very nice daily low, and of course a daily high as well comes in over there. All right, go to H4. H4 is on, we'll adjust it to that point over here. See on H4 we have a high that is formed over here. We have a formed high coming in over there. That is H4. And then of course we also have a low. Right, of course we also have a low over here. There's a low over there that is forming. Right, 1 hour highs. We adjust this to low. We try to look for, wow, it's a lot of consolidation happening over here. We have this over here. This is a high over here. See, at this point over here, a high over there. That's H1, 30 minutes. 30 minutes, of course, as well, we can flag this as a low. See the way we're doing, as we go to the lower time frame, we go, it's like we're going as we are narrowing down to the where the price is. That is what we call price action. As you move from a higher time frame to a lower time frame, you go as you narrow down the market to the exact where the market is right now. So where the market is right now, this is what gold looks like as we stand right now. This was the best area for a buy. The moment this candle came down, got rejected over here, the next one starts and then broke the top of this candle. That could have been your entry, or also you could have entered after this candle closed over here. For impulse entry, this could have been it, but for a confirmation entry, we'd have waited for this candle to close and then we enter from here, take a buy, and then push up with it, but well, that's already passed. So we wait for something else to work out. That's already passed, so we can't really dwell on the past. We look for the next possible move that we can actually execute on. And that will take me to 15 minutes. Just want to see what the market is doing right now. See, 15 minutes is forming a support session over here, a support area. The 15 minutes is forming a support area down here. But this area as well, the movement between here and here is actually very small. It's very small for you to say that you're going to take a buy from that point. So this is what I will do. I would put possible sells below this point. Possible sells below the 23, below 23, 36 over there. Yeah, 23.36. Or go all the way to 23.29. Take profit 23.29 over here. That could be, that's something that most probably can work out. Let's see, look at something else that can work out in terms of buys. In terms of buys, we can get, if we do get a break above the wick over here, like that, we can get ourselves some possible buys over here. Possible buys 23.42. And we take all the way to tick P over here, take profits. Okay. So there's that. And the thing of course, is this one this one definitely is going to be TP1, because let's put up there, that is TP1. This will be TP2. Right. As the market moves, of course. Yep, over there. That will be sorry. That will be TP2. And then of course, as the market continue to go down, you'll be to fill in these wicks and also fill in that wick. So we may have ourselves TP3 and TP4. This is if we get some very good pressures on the sell side, right? But remember, the overall trend is bullish. So you don't want to be caught holding long-term orders on sales on gold right now. You don't want to get yourself caught in this, right? So a very small stop loss area. Should we break below this point, we're going to push to this point. And should we have more energies, more pressure, or more volume, sorry, should we have more volumes to press to break down here, it's going to be breaking down to the next level, breaking down to the next level, breaking down to the next level. On the other side, on the take profit side, on the buy side, our buys above this point, break above, long position, put in about over there, buys above that side, stop loss somewhere like there. Yeah, we want to see some, we want to have some good pressure to push the market from this point all the way up here, and then probably continue pushing up and up and up. Let me adjust that to that point. Yeah, it's a nice area for trade. It's a nice area. It's a good area that we can trade. And of course, this is the highest. This is the highest that the market has been so far. So we're not looking at anything else on the left to see where the market will go next. We don't have anything. We don't have any prehistoric move past this point. So that will be the top. Sorry. No, actually we do. This is 15 minutes. Yeah, we do. All right. So this is right. We could have a move. We need some good pressure that will push past these rejections over here. We need some good move, some good pressures, some good volumes to push straight to this point. And should we break above that point, of course, we have, we still have some points over here on the left, like this point over here. And we have another one over here. See the areas where the market was pushing and then getting rejected, pushing and then retracing from that point, or where we got pullbacks as the market went down, right? So you see, we still have very good pressures. That's why I'm telling you, overall, the market is bullish. So we may have a very good, if we get the pressures that we need to push the market up, it needs to break above. And you see what? You can seize all these opportunities from here to here. That's some very good trade on gold. Here to here, a very good trade. Here to here, that's very good trade, right? So basically what you can do is sometimes you enter this market at this point and then enter into profit. Probably let's say the market is around this area right now in profit. What you can do is you can move your take profit to the next one, and then of course move your stop loss to cover, to do something that we call trail stopping. So you can just trail stop as the market moves. Okay, right? You see it's pushing past to break this area. It's not really a very good area that we can say the market will move freely, but on this sector, the thing that could happen is we need some pressure, some nice pressure that may have candles like this forming, right? So how do you know if there's pressure in the market or not? Look at this. This is a very good example. Here we have a very big candle coming from here to this point. Next one is a very big candle coming from here to this point, but then this candle becomes smaller. Okay, that means that there were pressure in these two candles. These are 30 minutes, 30 minutes candle. There was a lot of pressure for the last 1 hour, and definitely that is because of London Open. It was London Open, so there was good pressure for the past 1 hour, which the London market opened, of course, came in with its own pressures. Now the pressure is reducing a bit. That's why you see the candles are beginning to be small. So if you want to know a place where the market had had more pressures, and then you'll see, but it will be seen by the size of candles that are forming, right? See, size of candles like this one all the way down to this point, that was a very high pressure area. But then you see there are other areas where there's no big candles, because the market at that time, probably it's a sleeping market at that time. There's no volumes moving in, transactional minimal and stuff, like there's no fundamental event happening. So yeah, the market just becomes a bit dormant at that time. It's just stagnating. We like to call it consolidation. As you can see, these areas, when the small candles is when the market is consolidating, right? So this is what we'll be looking at. We will review it again tomorrow in the morning, and we'll see how the market has played out. Okay, so keep an eye above 23.43. You can do a buy to that point. Make sure you have a very nice stop loss. Don't give a very big stop loss. We don't really like the rejections of the left, but we should have something filling up this week, something we call a weak fill. Okay, should we break below this point, okay, as well, you can take a sell, and first target should be around this 23.29 area, and then the second target will be 23.23, then 23.19 as we go down. All right, so this is TP1 as well. I'll label it. We can get TP2 over here, and TP3, and so forth and so forth. Of course, it proceeds and it continues all the way to this point, right? It goes all the way to that point. So let's keep an eye. 1 hour, full view on 1 hour. This is all how it looks on full view on 1 hour. This is it, right? Full view in 1 hour. Should we get a break above this point? We want to go to this point, to that point, and continue up like that, and down still as well. See, as you can see as well, you can even know that the market is very bullish than bearish, because you can see on the bullish side we have potential big areas for the market to move, or even target spaces for us, right? But on the selling side, you see they are very small areas, very small zones for you to trade, very small zones. Some quick these will be quick trades, but here you can actually do a day trade very comfortably. And also someone who is a swing trader, of course, can hold all this move to go all the way up, right? Great. So that being said, we will leave it at there. We will convene again tomorrow morning, and we shall see how the market played out today. All right. Okay, guys, take care and have a good one. Have a good day. Do not overtrade. Use risk management. Always put a stop loss. All right. Take care. Like, subscribe, share. Speed out tomorrow. Over and out.